Hi there, it's Ryan G. Wright with DoHardMoney.com, and today what we're going to be talking about is what do real estate investors look for? Well, I'll tell you one thing they look for. They look for stinky houses. Yes. So stinky houses that are in need of work, houses that have problems are houses real estate investors are looking for. Here's the deal. If the house is in perfect condition, there's really not a lot of value I can add to the transaction other than speed. And occasionally you'll find a property that's in good condition, doesn't need any work, where somebody just needs money fast. But in most cases, that's not the case. In most cases, there's a problem. And the problem either is, A, the property's in bad condition and it can't really sell to somebody that can get an FHA loan. Or you're going to be in a situation where they have a tenant problem, or you're going to be in a situation where they just need cash quickly. But as a real estate investor, it really comes down to a few things. And the biggest one is, what is your strategy? Just like a tool belt that a general contractor is going to wear when he's doing some work on a property, you need to have lots of items in your tool belt. You need a hammer, you need a screwdriver, you need a Phillips, you need a standard, you need a wrench, you need different things in your tool belt because every property isn't matched with every strategy. Let me give you some examples. On some properties, it might make sense to wholesale the deal. The wholesale is if you combine a retail and a wholesale deal, if they had a baby, it'd be a wholesale, basically meaning you buy a property that needs less than $5,000 of work and you put it on the retail market rather than trying to wholesale it. Wholesaling means you buy a property, it's got to have a lot of margin, and you're assigning that contract out to somebody else, and they're taking over a position, you're getting an assignment fee, or you'll do a simultaneous. A couple other strategies along the wholesales. Or there may be one where a fix and flip is just necessary. Hey, this is a great one for a fix and flip. I can fix this property up, sell it, make a profit. It may be a strategy of a BRRRR deal where you're trying to get into a rental property with little to no money down. So you're getting a loan for the purchase, the rehab, and then you're doing the BRRRR deal. Or it may be a situation where you just need to turn it into a rental property. Straight up rental property, you don't have to do anything else. You qualify for long-term financing. In the end, it really depends. What real estate investors are looking for depends on the strategy that they're using, which depends on the property. So the more educated you are in understanding strategies, and the more educated you understand the properties, the better time you're going to have as to knowing if it's a good deal or not. In the end, real estate investors are looking to make money. The word investor means I want to get a return on investment. And there's two types of investments I'm making into a deal like this. First off, I have my investment of time. I put time into it. I want to get a return for the time that I put into it. The second one is I want a return on capital. Capital is the money I put in or the money I'm investing in this project, and I want to get a return on my capital as well. Return on time, return on capital. I'm looking for both of those. And that's going to vary because if I'm doing a rental property, I'm actually okay making a little bit of money, but planning on making that forever. So for example, if I do a rental property and BRRRR deal, I may only make $100 a month or maybe $50 a month. However, the tenant is paying down my loan each month. So maybe $100 a month is also going to the loan pay down, which the tenant's paying for, not me. I'm also going to have some depreciation, which is going to help lower my tax bracket, which is going to save me some money as well. I'm also going to have appreciation that's happening with the property. So there's multiple ways of making profit on that. So I may be okay with $50 a month. However, if I'm going to do a fix and flip, I'm not okay with $50 a month. On a fix and flip, I want to make about 10% of the resale price. So if I'm going to sell that property for $100,000, I want to make 10% or $10,000 on that property. That's what I want to make, or it's not worth my risk to do that. And that's on top of the money it would cost to rehab it and on top of the cost of money. So I got to be able to pay everything and still make that 10%. If I'm doing work myself as a general contractor, I should be compensated for that in addition to the profit margin that I'm making. See, that 10% profit margin on a fix and flip is what you should get paid for taking on the risk, not for you doing the work. So if you're also doing work on that property, you should be getting even better than a 10%, and you can make even better than that on a fix and flip type deal always. Now when it comes to a wholesale deal, I don't have all the risk. I don't have to buy the property. I don't have to do the rehab. I don't have to find contractors. I don't have to manage them. I don't have to resell the property. I don't have to worry about the ups and downs that may happen in the real estate market during the time that I hold that property. So I'm willing to make less money than I would in a fix and flip, because I'm getting my money fast and I'm able to get on to the next deal. So a typical wholesale deal is anywhere between $5,000 and $10,000, sometimes a little higher. As a matter of fact, I know people have made $100,000 on a wholesale deal. Those are whales. Those are ones people talk about at seminars and everybody gets excited about. But the reality is you're probably around $10,000, give or take, when you're doing a wholesale deal. So you're looking for something different in those situations. If you're investing out of state, a wholesale deal might be easier than doing a rehab. So you might be looking for something like that. If you're in your own backyard, it may be good. If I'm looking for a rental property, I really like 4 bedrooms, 2 bathrooms, and a 2-car carport or a 2-car garage. Otherwise, I don't want that as a rental property. Might be looking at neighborhoods. If I'm going to do a rental property, I want to be in a low crime neighborhood. Whereas if I'm doing a wholesale deal or maybe a fix and flip, neighborhood may not be as big of an issue. If it's a wholesale deal, it's definitely not, because I'm not going to buy it unless I have a buyer that's going to buy it from me. On a fix and flip, I'm a little more concerned about the neighborhood. It's got to be better than that, but it doesn't have to be quite as good as what I'm looking for in a rental property. Now, with that is when it comes to landlording, there's a bunch of different ways. There's A class, B class, and C class properties. And so there's A plus, B plus, A minus. Those are the types of things that you have to make some determinations. If you're going to be working in C class neighborhoods, you're basically dealing with properties that are going to have high turnover, lots of maintenance, but they can get better cash flow. You see, those properties are priced so you can make more money because you're going to have to deal with a lot more crap than you would with an A class property. A class property meaning you're always going to have rent, you're not going to have a lot of turnover. But the problem with the A class properties is you're going to pay too much for them, so your return on investment goes down. I like to be in the B class properties, which are typically your working class neighborhoods. People that get up and go to work every single day that have families. I find that if you treat them right, they stay for quite a long time. In the end, what you're looking for as a real estate investor, or what real estate investors are looking for, is they're looking to make a profit. And the more you know about the tools in your tool belt to make a profit, to make a return on your investment, the better. That will help you know the strategy, so when you actually find the right deal, then you'll know how to marry those two and make a determination about what's right and what's right for you. If you've enjoyed this video, please give us a thumbs up. Give a positive comment and subscribe to the channel if you haven't already. And we'd love to have you there. Check us out over at dohardmoney.com if you're interested in these tools and understanding on how to do things, how to find properties. We've got it all there. Check us out and make it a very profitable day. Bye for now.